Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have Gautam Kalia, Senior Vice President and Head Super Investor at Sharekhan by BNP Paribas. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So that's where we keep waiting for your queries. But then, Gautam, good evening and welcome to the show. First question via email. Harish actually is writing to us, and he's been investing since almost a year in Axis Blue Chip Fund, 2,000 rupees per month. Canara Robeco Flexi Cap, 2,000 rupees per month, and he's been investing for 6 months in HDFC Mid Cap Opportunity, Kotak Emerging Equity, and Nippon India Small Cap. And he says that from last 2 years, he's been investing in Kotak Small Cap, SBI Small Cap, Axis Small Cap. That's the complete portfolio. And he needs 30 lakhs after 14 years. So I don't have Harish on the phone line, but I really want to understand that what's the goal like and what exactly he wants to do with 30 lakhs after 14 years. Is there any specific requirement or a goal-specific planning that needs to be done? But overall, how is the fund mix looking to you?
Yeah, so the fund mix is okay. There are a few changes that I would like to suggest because the allocation to the small and mid cap space is nearly 73%, which is very high. So that's something that I would suggest that he reduces. Otherwise, his existing SIP of 15,000 over the next 14 years will create a corpus of about 65 lakhs, assuming a return of 12%. So he's on track. He's also mentioned in the question about considering inflation. So I'm assuming that if we take as inflation at 7%, which is provided in the question, and an investment of 30 lakhs, he's assuming that in 14 years that inflation adjusted amount will become actually close to 75-80 lakhs. So he'll be a little bit shy of his target with 65 lakhs. So he'll probably need to increase his SIP value a little bit over time to be able to meet his inflation adjusted target. If it's not inflation adjusted, then he's meeting his target quite well in 14 years with an assumption of 12% per year. Now, when I come to the funds, his Axis Blue Chip Fund, we have a preference here. So we would prefer him to look at ICICI Prudential Blue Chip Fund. That's our research pick. Nippon India Small Cap Fund, again, the allocation is very high in the small cap space. So we are saying that he should shift that to a Mirae Asset Emerging Blue Chip Fund, which is a large and mid play. SBI Small Cap Fund, again, from an allocation perspective, we are saying move it to a Franklin India Flexi Cap. So it's in the Flexi Cap space. And finally, the Axis Small Cap Fund of 2,000 that he's putting every month, that should be moved to, again, ICICI Prudential Blue Chip Fund. So that way, his number of schemes also ends up being lower, as well as allocation is better spread and more even with a bias towards large cap.
All right, so that's the solution and recommendation to Harish. But Gautam, I have Mr. K.N. Reddy on the phone line with me from Hyderabad. Mr. Reddy, hi, good evening. How are you doing, sir?
Madam, fine, madam.
You want to know if it's the right time to invest in Franklin India, smaller companies, and HDFC Mid Cap Fund. Do you already have an existing portfolio where you are investing in mutual funds, sir?
Yes, madam. Yes, madam.
Do you already have mid cap and small caps?
I am having. Yes, since the last 5 years, I am investing, madam. SIPs, both funds.
But it's okay. So in these two funds, you are investing in. You are since 5 years invested in the small cap and a mid cap fund.
Yes, HDFC Mid Cap and Franklin India Small Cap.
Okay, so you want to know if it's the right time to redeem the money. So do you? Are you really need?
No.
Right now, do you need the money?
Is the right time to exit, or I am continue.
But is there any specific need? Because if there's no specific need, and if you have a goal aligned with this investment,
no specific
then
need,
you.
Madam.
Okay. Are you happy with the fund's performance? That definitely you must.
Market is high now, lifetime high. That's why I am asking.
Okay, so if there's no need for you right now, you should stay put. But then, Gautam.
Yes, madam.
Valid concern, given that there's a concern around valuation, especially in the small and mid cap space. What you need to know is our research view is that we are still bullish in the small and mid cap space, and we still expect a continued upside there. So if you have SIPs going, please maintain them. There is no need to take out your money because of valuation concerns. There are still a high concentration of companies in the small and mid cap space that belong to sectors that are doing very well. So that's why there'll always be some option or the other for fund managers to select from to build their portfolio. And that's one of the key reasons I should stay invested. But again, let me bring back the conversation to what Kavita was talking about. It is the decision should not be taken on a standalone perspective. It should be taken in the
Concern for
context
the
of your
valuation,
financial
will it
goals.
also exist for a mutual fund investor? The concern for valuation, will that exist for a mutual fund investor also, or someone who's more like a stock investor? And when you talk about investor, your time horizon should be 5 or more than that, right? So the kind of movement you see in small cap and mid cap right now, it should not really, the movement should not be the reason for you to take a call to exit a fund, because you are
Exactly.
invested in it for a long time.
Exactly. So, that's why I wanted to bring back the conversation to the point that what is your financial objective and what is your current portfolio look like? Because if your current portfolio is only small and mid cap, then definitely you should look at diversifying and increasing exposure to large and maybe a few flexi cap funds also. But if that's not the case, it's a well diversified portfolio, and you're just asking because you're concerned about valuations, and really you don't have an issue with the time horizon, even though you've been investing for long and you can continue to invest for long, and it is a SIP, then I don't think you need to be asking that question itself. You should continue.
Reddy, are you happy with Gautam's answer? Is there anything else you want to ask him?
No, madam.
All right, all the best, sir. We will take Gagan's question, Gautam, and he wants you to review his portfolio. He's got big targets for himself, and he has an investment strategy also laid out for that. Um, okay, so he has a few funds where he started investing and has stopped but not redeemed his money out. Nippon Small Cap, Canara Robeco Small Cap. These are ongoing funds. HDFC Multi Cap, HDFC Mid Cap Opportunity, ICICI Flexi Cap, Parag Parikh Flexi Cap, Nippon Multi Cap, and his ongoing investment is also in NPS. He says that he doesn't have large cap since he thinks the large cap exposure is covered through multi caps and flexi cap. Other than that, he has other blue chips which are better priced for him. So obviously wealth creation is what he's written for himself, and so far he wants to understand how are these funds for him. And so what's your take on his entire portfolio and the way he's planned it out,
Yeah.
Gautam?
Yeah, so Gagan presents an interesting view because there are some clients who do this, which is that a large cap selection I will do myself. I will do my own research and select the stocks and buy them at the price that I'm comfortable with. But it's a small and mid cap space where I'm not comfortable doing the research, so I'll rely on experts. I'll rely on fund management expertise and invest in fund managers. And that's really what he's done in his portfolio. That's what he's saying. And that's why if I just look at his mutual fund portfolio, it is obviously very biased towards flexi, mid, and small. And there's hardly any large cap focus fund there. There's no focus because his investments are direct into stocks there. So if you're comfortable, I would just say one thing: please do hold your direct investments to the same standard as your mutual fund investments. So when you're comparing performance, please look at CAGR performance. Don't cut corners there. Take the effort and actually calculate CAGR of your investments in stocks. And if you don't have the time, you find because of your life stage changing or changes in your lifestyle or your journey in your life, if you find that you are not able to make the time, then you're probably better off moving those direct stock investments into large cap funds and having a complete, robust portfolio. And if you're okay doing that, then I just suggest a few tweaks to your portfolio, which is you've got ICICI Flexi Cap. You can probably move that to ICICI Prudential Blue Chip. So there you increase your large cap exposure. You've got HDFC multi-cap, you can probably move that again to ICICI Prudential blue chip. So that way you add blue chip to your portfolio, and you continue with your 32,000 rupees 500 value of SIP every month.
All right, let's move on to our next question, which is from Satyendra, again an email query, and he has 5 SIPs of 2,000 each going on in Axis Blue Chip, Axis Small Cap, Kotak Emerging Equity, Parag Parikh Flexi Cap, HDFC Small Cap. Period is 20 years and total is 10,000 per month. So he wants to understand the funds, if they are fine for him, and total corpus that he might land up accumulating after 20 years.
So you're looking, Satyendra, you're looking at a corpus of about 1 crore if your SIP grows at 12% every year for the next 20 years. As far as scheme selection is concerned, there are some changes we'll like to suggest. So Kotak Emerging Equity and Parag Parikh Flexi Cap, please continue with the 2,000 value, but you'll have to make adjustments. So Axis Blue Chip Fund, we suggest HDFC Top 100 Fund, which we prefer. Axis Small Cap Fund, you're putting in 2,000 there, or you're planning to put 2,000, maybe split that equally, 1,000 between the large cap scheme of HDFC Top 100 and Mirae Asset Emerging Blue Chip. So that way you increase your blue chip investment. And HDFC Small Cap Fund, again from allocation perspective, too much in the small and mid cap space, so reduce that by 1,000 and move that 1,000 to Parag Parikh Flexi Cap. So you got about 3,000 going in Parag Parikh Flexi Cap.
All right, let's move on. And so one thing, that's very common in most of these questions, Gautam, is a flexi cap, which is usually a Parag Parikh flexi cap that we see, investors having in their portfolio a lot. And one is obviously a category of mid cap and a small cap these days. But then, in selecting a flexi cap also, I want you to give our viewers some amount of, a guideline maybe, or a thumb rule that they should be following, and not just blindly copying a fund which is there maybe in your relative's portfolio or your friend's portfolio, and which is performing good for them. Specifically talking about flexi cap category, it's a very good category where you get diversification across market caps. But then how do you also place it? Because most of these flexi caps are large cap bias flexi cap. Do you strategically place a flexi cap which is maybe a more mid and small cap for better diversification? How should you actually strategize a flexi cap fund placing or exposure in your portfolio, Gautam?
Right, very interesting question. So there are two ways to do it, which I've seen work, and it's something that my research is also very comfortable suggesting. One is from a thumb rule perspective, just make sure that you have about 30-35% or 40% in large cap and another 30-35% in flexi cap, and the remaining you can put in mid and small cap focused. The other way is that you do away with flexi cap and you just do one small, one mid allocation to small cap, mid cap, and large cap. So that's another way that you can approach it. But typically, what we tell our clients is go for large cap, go for a large mid, and then go for a mid and small, along with a flexi cap. So flexi cap, if you have about 25-30% exposure, that's good, because essentially you need to understand that mutual funds is a way for you to delegate the decision making of stock selection and portfolio creation, and hence wealth creation over the long term, to someone else. So you can also delegate the space in which they choose to operate. And when you look at flexi caps, you have different ranges in which different schemes operate. And that's something that you can consider to see what you're comfortable with. So if there is a flexi cap that traditionally takes or historically has taken a very large exposure in the small and mid cap space and less in the large cap space, versus another flexi cap that takes much more large cap bias, then that is something for you to be aware of before taking that decision on which scheme to add to your portfolio, depending on the overall bent you want your portfolio to get. And those are the kind of nuances that we try to look at when we suggest a particular scheme. And there are other complications. So for example, if you already have a flexi cap running in your portfolio, then we have to look at exit load and tax implications. So is it really worth for that nuance making that change. So those are some considerations that we keep in mind before we suggest changes.
Right, let's move on to the last question of the day, which is from Mayank Gautam. And a corpus of 3 crores in 20 years is what he's looking at. And Nippon India Small Cap, Aditya Birla Sun Life Flexi Cap, Kotak Equity Opportunity, ICICI Pru Large and Mid Cap, Nippon Multi Cap, Mirae Asset Large Cap, Kotak Flexi Cap, SBI Blue Chip, and NPS. That's also a part of his investment. Okay, so far 3 crore corpus, 20 years, and that's the fund mix that he has written us.
So very close to achieving his target with the amounts, because you've got a 20,000 rupees per month SIP, which will take you to about 2 crores at 12% over 20 years. And you got an NPS investment where we've taken an assumption of 10% return, given that there'll be a ratio of debt, element of debt also. So that with the lump sum and SIP amount will add 80 lakhs to your total investment. So what you need to do is just try to increase your SIP value by 3% every year, which is hardly anything. And if you can do that, then you are on your way with this calculation to reaching the 3 crore target in 20 years. As far as schemes are concerned, just a few changes. I think most of the schemes are right, and the allocation is also quite good. So Kotak Flexi Cap, we would suggest you to look at Franklin India Flexi Cap. Nippon India Power, which is a sectoral fund where you have a 25% allocation, where we believe it's a little bit too aggressive. So maybe instead of 5,000, continue at 2,000, and the remaining 3,000 you split between Mirae Asset Mid Cap and the ICICI Pru Small Cap. So that way you're getting, you're taking enough risk, but not so much sectoral exposure.
All right, I think with that, thank you so much, Gautam, for being on the show today and helping our viewers with their financial portfolio queries. And on the Money Show, we will slip into a quick break, but then post that, let's talk about investments for senior citizens. How can they minimize their risk, and also look at investment options from where they can get regular income after this break.